All right. Welcome to Clarity Sessions with Bill Fauth, where we cut through the noise and bring you real, practical clarity on money, business, mindset, and everything in between. Now, if you're a mompreneur, a business owner, or someone who's just ready to take more control of your financial life, this is your space. No fluff, no overwhelm, just simple, powerful insights you can actually use. Because let's be real. When you got the right clarity, you make better decisions, and better decisions lead to a whole different life. And so let's get into it. Today's question is,
if someone gets paid in cash or through platforms like Venmo, do they still need to report it to the IRS?
There's different types of cash. Cash is a generic term. But the idea is that cash is folding money, dollar bills, that kind of thing. And then there's cash that you get paid in your Venmo account or your Zelle account, or there's money that might get wired into your bank account, or people pay you with a paper check and then you deposit that. Or you send them an invoice and you use your merchant account and that money ends up in your bank account. The IRS rules say if you're a U.S. citizen or a green card holder or a resident alien, you're required to report your worldwide income. In many cases, you have tax treaties, so if you're earning income in another country and you pay taxes in that country, you may avoid double taxation because you get a tax credit for what you paid in the other country. So there's rules around that. But let's just say the idea that you're getting, like I have a lot of hairstylists or people who do massage therapists, things like that, where they get paid in cash, or they get paid in Venmo, or they get paid in Zelle. The IRS is changing the rules now where they're policing that. Venmo and Zelle report on a 1099-K at the end of the year how much money you actually earn. And it used to be that I had to have 20,000 more deposits before you had to be required to report it. Otherwise, they wouldn't know about it. So the answer is that right now, I think for 2026, maybe it's going to be 2027, it's down to 5,000, and then it'll be down to 600, just like any other 1099 that you receive. So the short answer is you want to be able to, you're going to have to report it. If it creates a paper trail, you have to report it. If you get cash and folding money, then that's up to you what you decide to do with it. But if you take that money and deposit it in your bank account, you're creating a paper trail. The only thing you can do with cash, which is why you don't want to get cash, because you can't invest it. The only thing you can do with it is spend it. Use that for your groceries. Use that for stuff that you're going to pay out of pocket for. That doesn't give you a tax benefit. But the idea is that you want to report that income and claim the deductions against it, because then it gives you the ability to surface it, deposit it, and then you can invest it. I think that kind of covers what I wanted to talk about. So I think the idea is that the IRS is plugging the loopholes in terms of being able to hide money. So we need to be very astute and informed about how to legally avoid paying taxes, which is getting legitimate tax deductions. Report the income, but get to the deductions that you need to get, so you don't have to pay tax on it.